A warm welcome to Business Daily on Trust TV. I am Yusuf Akogu. We begin with our top stories at this time. Take a look. Glad to have you back. Let's move straight to the stock markets and look at what the data are saying. The markets are reopened today after Salah break, and we'll actually bring you some of the data that we have from the last trading day of the week, which was on Thursday, 20th of April, before the Salah break. Well, we are seeing the market closed that day in the positive territory, 0.29%, and of course the all share index, they're way above 51,000 basis points. The market capitalization, which is the total value of all the equities listed on the Nigerian stock market, there standing at 28 trillion naira. You look at the volume of trade that happened that day, 600.78 million volume of shares were actually traded among investors, of course, on the floor, valued at 5.054 billion naira. A huge number, a huge amount of money there. You can talk about that. And the deals that exchange hands among investors, 4,309 deals. These are the highlight of the trading activities on the floor that day. Moving quickly to the gainers, the stock that gained that day, we have the like of Access Corporation, topping there at 10%, a huge number there. Transcorp Hotels also there, 10%, and Transcorp also there as well as 9.87%. You recall that last week Access Bank indeed turning their results, the Q1 first quarter results there last week Wednesday. So probably that is responsible for what we are seeing, why the investors actually swoop on that stock that on that Thursday. That's the last trading day of last week before the Salah break. But again, moving quickly to the losers, which stocks are in the bottom half of the table. Of course, we have Champion Brewery doing that, they're trading negative there, 9.96%, followed by JS Bank, of course, 8.42%, and Cortex. If you know, Cortex is it's a cable manufacturing industry listed on the bourse on the Nigerian bourse, 4.35%. So these stocks actually didn't do well on the floor. That they probably, because of profit taken by investors or the shareholders of these companies, actually responsible, of course, for what happened. When festivities, Salah, Christmas or whatever is coming, you see a lot of people disposing their holdings for cash. So probably that was what was responsible for why we have these three stocks probably on the losing side last week. Hopefully, maybe by this week, they should be able to climb up and, of course, be among the gainers this week. Quickly look at what we have on the market movers, the top trade stocks. What we have the Transcorp. They've been there since the beginning of last week, and they have remained, very, very prominent in the market sector. We have the huge number there, 241 million volume of shares traded by the investors of that company. That's a huge number. You also have Access Holdings. Access Holdings has come to the fore, just like we said earlier. They're turning their reports. Access Bank turned in their reports last week, the first quarter report last week, and that has really, attracted quite a whole lot of investors of that company, and we are seeing them there doing very well there on the activity chart. 152 million volume of shares, and of course, to complete the three top market movers we are watching this on the show today, we have a UBA, United Bank for Africa, doing 39.2 million volume of shares. That's a very huge number, probably a whole lot of interest there in the stocks of this company. And I quickly look at what the sectors, how did the sectors fare that day? If you look at it, the NGS consumer goods is not really doing so well that day, 0.02%. If you look at what we showed you from the gainers, the losers, and of course down to the top trades, you did not see any of the consumer goods there, probably responsible why you are seeing them down there, 0.02%. If you go to in the industrial, of course, earlier we talked about the Curtis cable manufacturing firm, but again, that does not help their cause. They are down. NGS Industrial down 0.09%. Go to the the insurance sector. We call them penny stocks. Most of the insurance stocks are actually referred to as penny stocks because of how cheap they are on the floor. This is down. Is very, very strong here at 2.07%. They are close positive. And I go to the oil and gas sector. Of course, one will expect that given the whole lot of roles that the IOCs plays in this sector, we should expect them to remain very, very strong. The like of Seplat, the like of Mobi, of course, are actually, very, very prominent there on the floor. But again, the market down there at 0.22%, and coming down to NGS banking. Who would be surprised at what we are seeing in terms of performance by the banking sector? And you look at them, they're 2.90%. If you look at most of what we've been watching since last week from the floor, we saw most of the banking stocks doing very well. The turnover that people actually enjoy from this sector actually make it very, very lucrative. So I'm not going to advise any investor today, but if you want to know where to put your money, of course, we enjoy you to keep watching Business Daily, where we will keep telling you areas that you can actually put your money, especially when you want to invest in stock, when you want to invest in the capital market. Like you are seeing the banking sector, of course, you saw the UBA, the Access Bank, the Fidelity Bank, and the whole Jais Bank, and a whole lot of them actually doing greatly there. You see the banking sector there up 2.90%. That's a very good area to put your money. And before we cross over to the stock market, let's quickly look at what the other African markets are actually doing at this time. The African market, we're actually looking at three key markets from Africa today. You have Lusaka stock market. Lusaka stock market, in case you don't know, is in Zambia. Zambia is in Southern Africa. We see them closing in the last trading day. They're very, very flat. The all-share index, they're 8,021.24 basis points. That was why it ended last week Thursday. Go to Ghana, and our next door neighbor here, Ghana Stock Exchange, also closed very, very strongly, 2.68%. That is a huge number from there. That is one of the market that is rivaling Nigeria in the West Africa sub-region there. They're strongly there by 2.68%. And of course, NSC is in Nairobi. Nairobi is in Kenya. Nairobi Stock Exchange is in Kenya. So doing also strong there at 0.32%, with the market, all share index there 108.16%. And Nairobi Stock Exchange is one of the lucrative stock exchange in the Eastern African region. Very, very strong stock market. Yeah, I think I can, if my analysis is there, let's cross over to the broad streets, where Jamiu Mohammed, who is a stockbroker and of course head of capital market at App Security, joins me via phone for analysis. Good morning, Jamiu.
Good morning, Yusuf.
Good morning. It's good to have you again on Business Daily.
Thank you very much.
Take us through what is happening. The market just, resumed today after 3 or 4 days break. What's happening at the moment?
Yeah, thank you. After the negative trend that we experienced last week, the market resumed this morning, and we have seen the trend continuing in that last 2 days of last week. We experienced a 2 days gain, and the gain has started this morning. And those stocks that have started in that direction were those ones that have gained last week. And we have in the gainers chart, we have Transcorp, we have Japan, we have Jaiz Bank, we have Access, we have Transcorp. So these are the stocks that have been gaining for a while, and they are still on the bullish run. So when you look at the total value traded today in the market, have 1.7 billion worth of stock traded this morning, but only Access Bank constitutes more than 60% of the trade as at this morning as we have it. But Access Bank alone has traded more than 1 billion shares this morning. So, and the reason for the rally is not unconnected with the dividend, the result and the dividend declared last week by the company.
No, that's interesting. We see Access Bank, just like you rightly mentioned, the result is not unconnected with, last week, like you told us, they're actually turning their Q1 results, and which very, very impressive. Is that one of the driving force now that the investors are actually looking at? Because we also understand that many other companies also turning their result as well. We saw the like of Cadbury as well, did theirs last week as well. So why is everybody, going the way, of the Access Bank?
I am even quite surprised on the issue of this Q1. My projection earlier before was that the cash crunch that we have in banking sector will affect most of these companies. As we have manufacturers shouting that they were clamoring that cash crunch that affected their production by 30%. So they were able to produce 70% capacity then for the Q1. So my assumption was that it's going to affect all the sectors. But as we have it, those that have released so far for Q1, the Q1 result has been fantastic. Look at the Cadbury. Cadbury grew is profit for more than 100%. So these are the things that we see Cadbury as results. We have other companies who have released their first quarter results. The result is okay as we have it this month. So the reason why they are having this rally is because of the first quarter results that they have posted to the Nigerian Stock Exchange. So it actually puts everybody aware that we're thinking that the first quarter results will not be good, but those that have released us, about 5 companies have released so far. Most of them are even have growth in their earnings more than what they declared in 2020, in the first quarter 2020.
That's quite impressive there. But before I let you go, Mr. Jamiu, we understand that before now, the foreign investors, actually featured prominent in our capital market. For a while now, we saw that their power has, in a way, whittled down. We saw local investors also coming in. First of all, what is the level of their participation in our market right now? And again, given the gains that we have recorded in the last 2 or 3 days before today, what do you think? How do you think? In what pattern do you think the market will close today? This is a 2-in-1 question.
Okay, let me start from the issue of foreign investors. Foreign investors before now, or about 5 years ago, we used to have them. They have about 70% participation, and local investors are having 30% participation. So I'm talking of from 2017 or so. But as we have it today, it has changed. So we are having less. I don't have exact figure as we speak, but we are having less than 30% for the participation from foreign investors. And we are having more than 7% from current investors. So what changed the narrative first is the issue of foreign exchange. The foreign exchange regime is we have many platforms that is giving us foreign exchange. So if they can unify all different markets of foreign exchange, from black market to FX, from FX import, from all these ones, if they can, an official one, if they can unify it to be a single one, it's going to help going to bring their dollar into the country. But because they were able to compete,
and Jamil, because of time, tell us in 30 seconds, how would the market close today? Your projection?
We believe market should close on the positive note.
Okay, so we hope the bulls will be sustained today on the floor of the Nigerian stock market. Thank you very much, Jamil Mohammed, for always being there for us for this live update.
Thank you.
So we go on a very quick break. When we come back, we'll go into our discussion proper. Stay with us.
Part of efforts to support Africa's goal of strengthening.
Now looking at the activity chart, as you can see right here, a total volume of 130.
Created a Boko Haram crisis that at that time was restricted to Yobe.
How secure are they? You can see security men with blood.
This is the road leading up to the
really, if you look at England squad, you are looking at EPL, you are looking at their names. You are not looking at
Welcome back. Let's move quickly to our discussion today. World Bank has advised Nigeria to unify its multiple exchange rates. We've been talking about this for a very long time. I have an economist, Dr. Sambo Ingawa. He joins me via Zoom from Kaduna. Good morning, Dr. Ingawa.
Hello, good morning. Thank you for having me.
Yes, good to see you. Good to see you. Let's quickly go into this discussion. We've been talking about this issue for a very long time. Multiple exchange rates. What do you make of this advice coming from the World Bank?
Well, it has been a perennial advice. It has been a perennial discussions also, even among ourselves, all through the decades, not just few years, but decades of multiple exchange rate windows have contributed to what you have just finished talking about, the flavor and the appetite of not only foreign investors in our markets, but even within the domestic markets as well. So it is really a long-standing issue, and every administration has come and gone and looked at it, played with it, toyed with it, and dropped it, and have left it for the next one, apparently. So it is one of the key issues that the economic management in this country has to look at and really address if the performance of the economy is going to make any headway. The multiple windows ostensibly were developed to probably infuse confidence and manage the foreign exchange regime. But it has finally only resulted in more confusion to an average investor. And not just confusion, but also a demoralization, a discouragement of participation, So we really need to address that. I mean, it's a long-standing issue.
Now, to what extent do you think these multiple exchange rates has affected the value of Naira? I mean, Naira has been, in a way, dwindling against some of the major foreign currencies.
Indeed. See, when you create space and opportunities for arbitrage, and therefore for speculation, we are actually reinforcing the difference between the windows. You are not actually managing them. You are not bringing them. You are not actually helping them to unify. Rather, you are creating incentive to reinforce the gaps and the differences, because the arbitrage opportunity creates further deepening of the differences. So it is, for all internal purposes, economic and
a lot of having technical challenges there with Dr. Ingawa. We hope we reconnect with him back. We are still talking about the multiple exchange rates we have in Nigeria. We've been talking about this, so many windows. We have the different kind of windows where this foreign exchange can actually be accessed. You can also talk about the parallel market where the value is higher. I mean, more than triple of what we have on the official exchange rate, which in most cases are not even accessible by Nigerians. Most of Nigerians will now have to rely on the, of course, the parallel markets to have access to forex. So these are some of the challenges. The Central Bank of Nigeria has made efforts at different times to ensure that this thing is resolved. But again, in a way, it doesn't seem to be yielding so much result. If you look at what has happened in the last 4, 5, 6 years, you see that Naira has lost close to 400% of its value against the US dollar, against the British pounds, of course the European euro, and of course some of the other major currencies. So I think I have Dr. Sambo is back now. Hello, Dr. Sambo, are you there?
Yes, I was saying, if you create an opportunity for arbitrage and speculation, rather than unify the rate, you're actually going to be expanding them even further. Because there will be no artificial demand on the commodity. And the fact that the base rate, that is the official rate, is fixed, it means the gaps with other non-official, relatively non-official, because if you look at the different windows, they are just administratively intervened regimes. They are not based on will and buy, will and seller, free market, and so on. So the parallel market, that is the alternative market, will continue going.
Okay, Dr. Sambo, do you think this is in any way unconnected to the current inflation rate? We saw what the CBN has done with monetary policy. The MPR currently stand at, above 80%, about 18% rather, while the inflation rate is there about 22.04%, which is an 18-year high that we have right now. Do you think, looking at the CBN policies in the last few years, do you think it's actually geared towards strengthening the Naira in any way?
Ostensibly, that is the effort, but then it is evidently ineffective. And for obvious reasons, look at it. The inflation regime is above 22-23%, and the interest rate regime is well below, it's negative. So even in that, you are creating incentive for arbitrage within the money market. You see, the triplet instrument, exchange rate, interest rate, and inflation rate, these are the essential indices that the monetary authorities are supposed to be managing. Now, they are concomitant. The inflation rate and the exchange rate and then the interest rate are triplets that reinforce one another. In Nigerian case, actually, the fundamental issue is the fact that the inflation regime, pervades and determine what happens in the foreign exchange market and in the money market. So interest rates, when they become below inflation regime, as we have had for many years, for many years, that means within the money market itself, even there is disincentive for all types of monetary behavior that we want to, for instance, savings cannot be encouraged, and therefore capital formation will not be there, and therefore investment will not be there, and the economy will not happen because of that, and so on. At the exchange rate market, you'll find that it is the inflation that impacts on the market because it determines the aggregate demand, which expands it because of inflation, and therefore puts pressure on the foreign exchange market itself. Not until interest rate regime are positive relative to inflation rate. But then where the inflation rate is so high again, that is where the quagmire starts. You cannot just jack up interest rates all interest simply to get positive. So the challenge, therefore, is to manage inflation regime in this economy. So we need to trace where are the sources of our inflation problems and be able to nip it in the bud so that we can have sanity in the various markets, foreign exchange market, the money market, and in the general output of the economy.
Dr. Sambo, just in 40 seconds, in 30 or 40 seconds, you talked about managing inflation rate, and of course that is what CBN has been trying to do in the last couple of meetings that it has had, Monetary Policy Committee meeting. But the World Bank has indeed again advised that the CBN should continue along that line, continue to tighten the MPR, which in a way have not really yielded any positive result. Do you think it's a very good advice? In 30 seconds, please.
Excuse me, that's the only thing the CBN can do, given the tools in its hand. But see, the problem is that you cannot just be moving and be following the inflation, because this inflation regime in Nigeria, the inflation rate is going to be going up ad infinitum. And therefore, that is not the end of the game. The end of the game is to know how to manage, trace the source of your inflation problem and need it now. And this is where the nexus of monetary and fiscal policy and fiscal behaviors come. Our inflation comes from our budgetary behavior. We are converting naira, the oil profit, natural resource profit,
thank you,
revenues from oil, you are converting it into naira and oversupplying naira into the economy. And
thank you, Dr. Sambo.
So we need to go back to that drawing board on the fiscal management issue.
Thank you so much.
How to treat oil money.
I must thank you, Dr. Sambo Ingawa, for your time on Business Daily. We appreciate your time. Time is not always enough when you're having fun, in a way. Thank you so much for your time. And that's our show for today. Join us tomorrow for more.